Alright, what's going on, guys? Today we are going to talk about smooth moving averages and every moving average that I use, which is basically just smooth and exponential. And these are key to identifying the direction of a trend. And we are always supposed to trade with the trend. So I'm going to show you how to put them on your charts on Thinkorswim. So let's start here. You're going to type in exponential, and you're going to get it right here. Moving average exponential, that's what it's short for. And you're going to add it, and you're going to add smoothed. I think it might just be SMA. No. It's simple moving average on here, but it's the same thing. Alright, now, this looks kind of confusing, but this it means is the average of 9 days. So that's fine. That's the most common, 9 days. And then we're going to go ahead and add again. Go to settings. And 50 days. And well, what we would do here is just pick one of these, and we're going to go with the exponential. No, let's go with simple, just to keep it simple. Okay, so we're going to go with a 9 day, 50 day, and 200 day. Okay. I should change the colors on them. Alright, let's do this real quick. Let's make this one orange. Okay, let's make this one green. No, not green. Just make this green. That color, okay. So this is what we got. Your simple moving average is just a summation of the last, whether it be 9, 50, or 200 candles. So each candle here, god damn it, don't do that to me. It's annoying. Okay, so the summation here for these, come on, god damn it. So this one that stays the tightest to the price is the 9 day, because it's just 9 candles back divided just what a regular average would be. And these are actually really useful, because when the price drops below, which it did here, see, this is the 50 day, so that's a bigger, when it finally tests that, you'll see prices will test it. They'll dip under, they'll bounce off, they'll dip under. But when you see significant drops below, you will know that for the next, I mean, since this is 50 day, you can assume while the price is going to drop. And then once it gets back above it, see how it stayed below, even tests it, price bounces off, you got the long wicks. And once it finally gets above it, that indicates, or could possibly indicate, that for the next while you're going to stay above this line and your price is trending up, right? So these all tell you the same thing, but just at different times. So this 200 one usually stays pretty horizontal, you know, it doesn't move like this 9 or 50 day one, but because it has way more prices to account for. So that's just something to help you. I mean, it's definitely no, like, it's not going to tell you exactly where the price is going or anything like that. It's just a good indication of the momentum and what people are wanting to buy. Right, so you come in here to the 1 year, 1 day. It looks a lot clearer now that you don't have the shadows. The shadows on the chart are just when it's gray, the market's closed, and when it's black, the market's open. But here with the 1 year, 1 day, it doesn't really matter because there are no after market candles. So one other thing I wanted to talk about here is the relative strength index. And this is just sort of a moving average, but what you really want to look at is here. This is the 30 or the 70 and the 30. When it's 70, that means it is overbought. You will notice that this matches up perfectly with the price points. So this is when it's way too high, you can expect a bit of a pullback, and as you can see, it did pull back, and boom, tested down to the lows here, and it likes to stay between this range, and you will notice that it does for pretty, I mean, it never gets too far out of there. When it does get really far out of there, that is an opportunity, and it could possibly be a pullback. So what I noticed with the RSI is when these get very high and they only pull back just a small amount, but the RSI pulls back a lot, that is very powerful momentum. So that is very strong to the upside. And as you can see, it's at a trading range, at a border, at a resistance. And that's when price moves the fastest, and that's where you can make the most money. So all of these indicators you want to use, they are the strongest, as you can tell, at trading ranges, at the borders of trading ranges. So here you have a bottom, here you have one, and here you have a peak. Now let's take a closer look in here. You can see that this price gapped up and it had a strong green day, but it was at the peak of the RSI at a resistance. It did break through, but you should always be wary because that could just be a slight test and you could see the pullback. But you see it does pull back, so the RSI is really far. I mean, it plummeted down in here, so you have some room to go. And then you see this price levels off, gaps through again, and that's where I would buy. I mean, once you really know this price is going to stay above here, because it could go up, but it could come down by the end of the day and you're stuck, and then it'll bounce back down. So it's just these little things. Here I would watch my 9-day. See, you'd realize that it touched, but the next day it still stayed above it. So you even see the wick. The wick stayed above it. You saw that the wick shows it went down below, but the solid candle stayed above it. That's the important part. And then it crashed again, but when it closed above, so that's another good sign. And that right there would give me a good indication that, hey, this could probably gap up tomorrow above the range. So that's all I have for you guys today, but remember, when charting, the key to this is to be patient. If you were the guy that jumped in on here thinking you're the smartest guy in the room, the next day you crash, what? Almost $10 a share. So you got to be wary, you got to know your ranges, and you got to realize that at the top here, price tends to bounce off, okay? And this pattern is also a double top, so that's double tops are two tops, obviously, and they're usually signs of a reversal, but obviously no reversal there. Too many good things going for Microsoft. Honestly, only thing going for the S&P right now is tech. So alright guys, that's all I have for you today. Like, comment, subscribe, leave me some stocks you want me to look at for you guys. This is just the educational portion of my channel. I do plan to just do market overviews with people who know what they're doing. I did want to start this channel specifically for people who want to learn and to talk about the overall market, see where it's going, see where it's headed, and see what other people have to say about it. So, see you guys later.